Copper prices are projected to remain elevated or rise further in 2026 due to persistent supply deficits and growing demand from various sectors, despite some forecasts of slight declines from 2025 peaks. Analysts anticipate structural market imbalances, with demand potentially outpacing supply by significant margins, driven by both established and emerging factors. Below is a comprehensive list of potential influencers categorized for clarity, including technologies, economic drivers, supply constraints, geopolitical events, and other elements that could boost demand or constrain supply, leading to price appreciation. These represent direct consumption increases from industries reliant on copper's conductivity and durability. Electric vehicles and new energy vehicles. EVs require 3 to 4 times more copper than traditional vehicles for wiring, batteries, and motors. Global EV adoption is expected to accelerate in 2026, with production growth driving up to 6% higher copper usage, especially in regions like the US and Europe pushing for electrification. Renewable energy technologies. Solar photovoltaic panels, wind turbines, and energy storage systems heavily use copper for cabling and components. The global shift to renewables could add 2 million metric tons per annum of demand over the next decade, with 2026 seeing spikes from expanded installations in China, the US, and India. AI and data centers. The boom in artificial intelligence requires massive data center expansions, which consume copper for power infrastructure, cooling systems, and high-speed networking. This emerging driver could contribute to a 20 to 24% surge in total copper demand by 2035, with significant impacts starting in 2026 as AI adoption scales globally. Power grids and infrastructure upgrades. Modernizing electrical grids for efficiency and integrating renewables will increase copper needs for transmission lines and substations. U.S. infrastructure spending and similar initiatives in India could boost demand by nearly 50% in some markets by 2031, with 2026 as a key ramp-up year. Low carbon and emerging technologies. Broader applications in hydrogen production, electric rail systems, and advanced electronics will further elevate consumption, as copper is essential for efficient energy transfer in these Swiss Army knife low-carbon solutions. Broader economic trends could amplify demand through increased activity and investment. Global economic growth and stimulus. Recovery in major economies like the US and India, potentially offsetting slower growth in China, could drive industrial demand. Chinese stimulus measures and US rate cuts are seen as tailwinds, pushing copper usage in manufacturing and construction. Infrastructure and energy projects. Government-funded projects worldwide, including those under green transition policies, are forecasted to increase copper demand by 6% in the US alone in 2026. Investment and speculation. Hedge funds and investors betting on copper's role in the energy transition could create upward price pressure through stockpiling and futures trading, especially amid low inventories. Limitations on production could tighten the market, indirectly boosting prices. Mine disruptions and deficits. Ongoing supply shortages from strikes, weather events, or operational issues at major mines are expected to persist, leading to structural deficits starting in 2026 and potentially averaging prices at $10,500–$12,500 per metric ton. Regulatory delays and high-grade shortages. Delays in new mine approvals and disputes over environmental regulations could hinder supply growth, exacerbating deficits amid rising demand. These could disrupt supply chains or spur precautionary buying. Trade tariffs and policies. U.S. tariffs on refined copper imports could lead to trade distortions, stockpiling, and higher domestic prices, with ripple effects globally. Geopolitical conflicts and wars. Escalations in regions like South America or Africa could halt production. Broader conflicts, such as extensions of the Russia-Ukraine war affecting global trade or new Middle East tensions disrupting shipping routes, might indirectly spike prices through supply chain risks and risk-off sentiment. export restrictions and supply chain vulnerabilities. Reciprocal tariffs or bans on critical minerals from major producers due to escalating trade wars could limit global supply, increasing over-reliance risks and volatility. Currency and inflation dynamics. A weaker US dollar could make copper more affordable for international buyers, boosting demand, while inflation might encourage commodity investments as hedges. Market volatility and fragmented premiums. Aggressive negotiations and tariff-driven trade flows could lead to heightened price swings, favoring appreciation in tight markets. Environmental and weather events. Extreme weather impacting mines could cause temporary shortages, amplifying price pressures. Overall, while some analysts predict a modest price dip to $10,000, $11,000 per ton range in 2026 from 2025 highs, the consensus leans towards sustained appreciation if demand from green tech and AI outstrips supply recoveries. These factors are interconnected, and actual outcomes will depend on how events unfold. If you like this content, do like and subscribe to the channel.